Hi, folks. This is Sean Hyman, and I want to talk to you very briefly about the psychology of trading and sticking to your trading plan, your trading system. And I've shown a chart here, just giving a historical example. There's nothing significant about the pair I picked or anything like that, but this happens to be Aussie yen on a daily 1-year chart. So each candle is a day in time, and it goes back a year in time on the chart. And I just put a slow stochastics on here, 1433 settings that you'll see down here, and this comprises, part of what I've, part of the dynamics of what I call my flashpoint indicator system, which is trading with the trend and using stochastics, and also a lot of times I incorporate Elliott wave and other things in that, and I also, pardon me, tend to look at a couple of time frames like daily and 4-hour charts. So there's a few dynamics to it, but let's just look at a simple trend following system using stochastics and think about the psychological aspects of it. Depending on where you start in a system, even a profitable system, it could shake somebody out because of the psychological aspects of it. For instance, consider if you started here in mid-year and this was in a downtrend and you knew it, so you were leaning towards taking shorting signals because you wanted to be with the trend. And let's say you started here and your first trade was a loser. Well, that's a big mental setback to begin with, but it's quickly helped by a win here, which is a pretty decent win, and then you get a next win, but then your next 2 trades in a row are losers. So in a 4 to 5 month period, you've had 3 losers and 2 winners. So it appears like a losing system. But if you look at it over a year's time, looking at each shorting signal, you had a winner here, winner here, winner here. So you had 3 winners before your first loser. You had a loser, 2 winners, and 2 losers before you were stopped out in the trend, and the trend changed to an uptrend. And so in looking at that, over about 3/4 of the year, so about roughly 9 months' time, there was 8 trades signaled, short signals in this downtrend. 5 of them you can see are green check marks. So 5 of them worked out, 3 of them did not. So did the system have an edge over time? Yes, it did, because it had more winning trades than losing trades. But also you'll notice too that the winning trades went far longer, so there was quite a bit of profit to be had here. Not that somebody would have reaped the entire move, I'm not insinuating that, but the potential for move was long here. The downdraft here, which could have produced quite a bit of profit, was long. Same here. This loss, since people, stops would have generally been up here somewhere, there would have been a small loss here, another sizable win here, a mediocre win here, and then a small loss here, and probably a medium loss here because they would have had their stop well above the trend line, and it broke out. So overall, your winners had the potential to run longer than your losers with any kind of decent stop management on the system. But the point is that if you'd have hopped in this thing in the midst of the transition, notice how the downtrend is fairly steady and strong here, and then it really kind of starts to plane out here, even though it's still honoring the downtrend line, and then switches to an uptrend. And here, if you'd come in the sideways choppy period, you would have been about 50-50 hit or miss. You could have flipped a coin and been about as accurate between these trades. Matter of fact, it might have even been a little bit to the negative if you'd had all 3 losers and 2 winners. But notice that if you give a system time, something that has an edge, if you give it time, and if you can mentally endure it over time, and that's the key, because see, you would have had to mentally give this 9 months to a year's time. It would have worked out profitably. Well, what you'll find a lot of traders do is when they hop in somewhere and it gets a little choppy, and there was as many losers as winners, or even a little bit more temporarily losers than winners, they say either the indicator doesn't work or this system doesn't work, and they make all kinds of mental justifications. But really, it tells them a lot about their self-doubt, and it tells them a lot about their need to be right. You know, none of us like to be wrong in life, right? We want to we want to naturally win arguments. We want to have our facts straight. We want the other person to be wrong and mistaken, and all that's just kind of human nature. And it's no different when it carries over into our trading. We want to be right in our trading, and so when something happens and it appears that we start to be wrong, or maybe that we are wrong in it, it's a hard pill to swallow. Just like saying you're sorry after an argument, or realizing that you were wrong, and that sort. It's that way in trades as well. And so sometimes people will hold on to losers longer than they should, which will ruin a system because of that need to be right. And because if they capture a loss, either through being stopped out or whatever, then they had to essentially admit to themselves they were wrong in that trade. And we don't like to admit that we're wrong, do we? But the better traders learn to admit they're wrong quickly. I was on the phone call when I worked for a Forex market maker some years back ago, and the man said he was never wrong in a trade. Well, I've never met a professional trader in my life that was never wrong in a trade. And so, you know, after we got off the phone call, I told somebody, I said, I guarantee you he's got marital problems, because the same guy who can never admit that he's wrong in a trade, and that's just a trade, you know, what does that matter in relation to personal relationships? You know, that same process carries over into his other areas of his life, because we don't have compartmentalized thinking. Our thinking generally in life carries through to our trading, and our trading carries through to our regular life, whether people realize it or not. And so the more you develop your character, the more you eliminate self-doubt, the more you can stick with the system even through its choppy periods, and just realize that you'll need to be a winner over time, and that's the key. Then you'll do quite well. And you know, I've learned this. I've been able to ride through choppy periods and keep on with my system. But you will see people, you know, even that follow your trades. I mean, like, you know, in the newsletter service, when these type of trades are happening here, you know, you're the hero. When you go through the choppy period, you know, they go through the self-doubt of you, but also it's the self-doubt of themselves. And then when the trend changes and you go back to you know, some great trades, then all of a sudden it's revived again. But you know, your emotional state cannot go up and down like the markets do. You know, you can't go into a depression here when there's the trend transition. You got to be able to stick to your guns and mentally and emotionally stick it out. And one of the biggest reasons why people lose is because they get they don't have the psychological aspect of trading down. So they get shaken out of trading altogether and get disgusted and put out with it right in these choppy periods, rather than judging it over time or trading long enough to have a realistic assessment of it. And so these are just some things that I want to share with you that I see as a common mistake among traders, and it's even one that seasoned traders can get stuck in if they don't keep a conscious eye on it. And so I hope this has helped you. Thanks so much for watching. And if you'd like to learn more about our services, click on the link below this video. Thank you so much, and bye-bye.